Welcome to Real Vision's Trade Ideas. Today we're sitting down with Guy Cerundolo of Cerundolo Investment Research. It is great to have you back.
Great to be back. Thank you.
So we're going to follow up on your bullish theses on both the DAX and the CAC 40. And specifically, you were here at the beginning of the year and you were recommending playing this by going long Commerzbank as well as Safran. You saw a 30% upside to Commerzbank, and that's exactly what happened.
Yes.
And then for Safran, you saw that it would potentially go up 15% from the lows. And again, that played out quite well. So could you take us through what you were looking at the time and what followed?
So in covering the domestic developed markets, I had noticed that both, starting with the CAC, France, it had achieved the downside target on my proprietary money flow analysis. And the thing that caught my eye there was that at the market level, the index had also traded to the lower end of a long-term regression trend channel off the 2009 low. So when I had the confluence of downside target, support levels hit, that's when I initiated the bullish call on the CAC. And about a week or so later, it was on the DAX that followed up. That too had achieved the MFU4, money flow unit 4 target. So with that said, I had put out bullish calls for both markets, and I had chosen a couple of stocks that actually lined up nicely on some of the work I do. Commerzbank was one in that it had declined to a prior multi-year low. The downside target, which was off of the prior year's high, it was an MFU4 target as well. And then when I was here, I said I'm expecting some type of an ABC, meaning a rally, then a pullback to support to unfold. And what I found amazing was afterwards that yes, we were up a little over 30%, 30.6, and the prior ABC rally was a 30% move. So in terms of symmetrical work or the target that was achieved, we got now a pullback to the prior low. So I think the C decline is done. And actually, the Commerzbank triggered another buy a week ago. I don't have an upside target yet, but it's shaped up nicely.
So before we get into that, could you break down exactly how your model works, what goes into it? I know this is all technical, right?
Yes, there's only a few other people that know how to do it. There's 3 other people, as I mentioned before, 2 of whom are retired. And basically, it's a way of measuring supply and demand in an asset. So I do this work, and we've done this work on market indices, on stocks, currencies, commodities, wherever there's money flowing in and out of an asset, it can be analyzed this way. And so that I've been using this for 25 years at some of the largest firms around, Fidelity and Wellington, where I've worked, and also co-managed money. And it's really critical to the work I do. It's more important to me than a straight edge ruler that a technician would use. So what it does is tries to help find these inflection points where, in the case of these indices, where there's enough supply coming out of a market that then you can see where it's abating, and then there's an inflection point, the odds of an inflection point increase. And that's exactly what happened with the CAC, the DAX, and Commerzbank was another. So the model itself finds those exhaustion points, and then on the reverse side, when demand starts to build and you need a bit of time to go by in a daily and weekly time frame to start measuring the demand, then you could have upside projections, and they start off short, intermediate, and long term.
Okay. So then what's the difference between money flow unit 1 versus money flow unit 4? How do you differentiate those?
Yeah, so the MFU1 is basically let's think of it as the base at which the demand is starting to come into an asset. After that's complete, that's the tricky part, and knowing when it is complete, then you start to get upside projections. And an MFU2 is typically a zone where you get the first sharp pullback after the base, and it gives you an opportunity to re-engage or to add to that conviction of a long position. And then once you surpass that MFU2, that's when you really press the position. And when you get to an MFU3, depending on the market cycle you're in, there's about a 70% chance that you could get a significant pullback, and that does happen from time to time. And then eventually you'll go to a MFU4, and that's where about 75% of the time you'll get a more of a big correction, and things will shift the other way. And then about 5% of the times you'll have a MFU5 happen. That happened in 2002 with the tech bubble.
Interesting.
And 2009 low actually was MFU5.
Interesting. So in the case of Commerzbank, at the time that you were suggesting this trade, there was all sorts of things going on with Deutsche Bank. There's a potential merger that didn't go through. Do you look at any of these other fundamental things, or does that incorporate into your research at all? Because that didn't end up panning out, but then the trade ended up working out anyway.
That's something I don't foresee, and it's not part of my toolkit. And the funny thing, too, when I've worked at, let's say, Fidelity way back when, and I had a team of 3 or 4 other technicians, and it's portfolio managers want us to do our work and stick to our discipline. They don't want you to bring in all these other factors. And what edge do I have? And what edge do a lot of other people have? I've been in rooms where morning meetings is like 50 to 125 investors going back and forth, talking about this one item, bulls and bears. So the point is, there's a lot of noise, and if I could just measure supply, demand, the way I do it, at least I have some type of an edge. And I've seen this happen many, many times over the years. You get price action, and then the story comes out why. So I can't tell you why it's going to happen. I think the odds are that something like that was going to happen. My stop was pretty tight. If it didn't work, then it doesn't work. So.
Now, at the time that you suggested this trade, it was in early January. There were a lot of other markets that were bottoming out at the time. Were you also getting signals on some of these other markets? Because if you put the trade on, let's say the S&P 500, that also would have played out quite nicely.
Oh yes, the S&P came a little bit later, and I didn't get the exact low in December, but in January, yes, I upgraded the S&P and went on to do a number of other, Italy and Spain at some point, and then other market indices in the U.S., mid cap, small cap.
And did you take profits on your Commerce and Safran trades?
Yes, the Commerce didn't get the exact high, but just slightly off the high. Then once we get a short-term trend line break, just to confirm that it was done, yes. And Safran, when it reached that target, I felt when you have an upside target based on the money flow work, you just take it. And it did run a little bit more than the 124, a couple of percent, which is fine. But then it corrected 10%. And now it's re-engaged on the upside. But yes, they were closed positions.
Okay, so based on where we are now, can you take us through your charts and what signals you're seeing and where people should trade? Is there still more room to run here?
I think in both indices, the CAC and the DAX, I do see about 6% more on the DAX. And that comes into a target zone. And that's where I will have to analyze, is this an important inflection point or just a pause? And I won't know that until we get into that zone and see how the market behaves, if there's a lot of supply coming into the market. But as it stands now, the trajectory is still upward sloping, 6% there. In the case of the CAC, I see another 5% at a minimum. And then I'll have to decide. That's where the target levels are overlapping, and I'll have to decide. And in both cases, that's probably a 20% rally since I was here last.
Yeah. Do these signals give any sense of timing?
They don't, because theoretically we could be up 5% in a week, or it could take a month. Time and price are the most difficult things I've had to try to help people understand. It's really, really difficult to do. I feel very confident with the work that I do in terms of the price action, the price levels, but the timing is, I'm not sure.
So you've been long the CAC and the DAX for quite a while now. Would you suggest this trade now for new people getting into it, or is it simply just continuing the long that you had from a while ago?
I think for a nimble trader, one could try to play for this last 5 to 6% upside and keep a disciplined stop. Let's say even a new 2-week low on each index. But for the people that are engaged from the low where the risk reward was very good, then I'm still holding strong to staying involved, staying engaged, and then play the upside.
Okay, could you summarize your trade ideas in 30 seconds?
I would still stay long some of these major European markets, both CAC and DAX, minimum 5% upside before the decision is made as to whether it's capped or do we pause for a refresh even higher. Bigger picture, the trends are looking really good in these indices. But if I could capture the first at least 20% move of part of that trade, then I'm pretty happy with that. But we'll know, I think, within the next couple of months.
Great. Guy, thank you so much.
Thank you.
So Guy is still bullish on the German DAX and the CAC 40. Specifically, he suggests staying long the DAX at current levels and sees another 6% upside potential. His stop loss for new traders is the previous 2-week low. He also suggests staying long the CAC 40 and sees another 5% upside potential. His stop loss for new traders is the previous 2-week low. Just remember, this is a trade idea and not investment advice. You should do your own research, consider your risk tolerance, and invest accordingly. For Real Vision, I'm Justine Underhill.